Welcome to Markets Now. I'm Michelle Rook with Shelby Risk Management Commodities, and kind of some mixed closes in both grain and livestock futures trade. We did have the cotton market a bit higher, which we'll talk about a little later on as well. But Chuck, thanks for joining us. Let's talk about corn and soybeans down on Friday, and we're going to have lower weekly closes again here. The funds just are continuing to sell that market, and talk about some of the reasons that they push that side so hard.
Yeah, they seem to be relentless here. I know a lot of analysts, and we look at, how big they are. Early in the day on Friday, the market did rally back and looked a little bit positive, but I think those were short-term traders that had sold the market. Maybe a little bit of producers selling was in corn and bean market on that rally, but we gave it up at the end of the day. Funds are content to sell this market, and the USDA numbers, even though the numbers at face value were somewhat negative overall, the funds continue to pile on. And I think one thing to watch out for is producers are going to have to make a decision if they have March basis contracts. We saw that occur in December. So funds are aware that producers are either going to have to roll or make a sale as they come into the next couple of weeks.
So how much of this crop is unsold out there?
I think it's 50 to 60%. I know producers have done a lot of basis contracts. I know there's grain sitting in the bin, so it's a fairly large amount. And when you think about it, put it in perspective, USDA says we're going to have 2.17 billion bushel left come September. So those bushels are out there. They're searching for a home, and it's difficult for producers to let those bushels go in this market that seems to be gone down way too much in their minds.
As far as a catalyst for the funds maybe to finally cover their short positions, supply shock, a demand shock, but what about when we get into the end of the quarter? Is that just a time they might bank some profits or not?
Well, typically the funds like to bank some money at the end of quarters. Also, I think we have the acreage report. So that could be a catalyst twofold there that could trigger some of the funds out there, maybe the middle of March on out, to take some of the money off the table. Doesn't mean they have to stay out, but it just means they're not willing to risk some big profits. And to me, that's the next point that we could see a significant move if those funds don't want to hang around and see the acres and don't want to risk the quarterly grain stocks.
We're still watching the South American crop, and it looked like Friday maybe some rain chances in Argentina may have played into the negativity in corn and beans again.
Yeah, we saw a flip in the pattern. Argentina had been hot and dry. Now they're going to receive some moisture. Brazil was getting rain. Kind of a welcome pause here as they stopped the rain in Brazil and are limited compared to more rain in Argentina. Also going forward, I mean, that might be a bright spot for corn in the future if that second crop safrinha corn starts to enter into a couple of weeks of hot and dry weather, but that's still several weeks away before that would impact the corn price.
And as we start a new week, we're going to be looking ahead to the USDA Ag Outlook Forum, and so is there the potential there to see more pressure, Chuck?
If they come down to 92 million acres, a couple million less than what we had in 23, and then a trend line yield of 183, they're simply statisticians. So when you look at a carryout at 2.17, you use those kind of acres and yield, you're going to take the carryout without an increased demand up to 2.6, 2.7 billion. So, as a producer, when you simply look at those numbers, it's not hard to figure out where we'll be a year from now if that all comes to pass, which means lower prices if the carryout jumps from 2.17 to 2.6 or 2.7.
What do you think we're going to likely see on soybeans? You go from 315 million bushels to what now?
Well, I think they're going to jump acres. A couple million would make sense. On the yield, if they go up to 52.5, 53, then you can take the carry out close to 400 if they want to go straight line math without an increased demand. One of the bright spots for the soybean market might be the increase in the biofuels coming next year as those plants come online. It'd be interesting to see if USDA does incorporate better demand. Certainly going to need that, or the carryout will grow in beans just like it is going to grow in corn.
What about the Middle East conflict and all these shipping issues that we see? Is that another factor that the funds have been watching?
Yeah, looking back, I really think with the Israeli conflict started, that's when the funds decided that, another world conflict, especially in that area that affects shipping in the Red Sea, also when countries are in conflict, they're certainly not consuming at their normal rate. So I think that was kind of the beginning. And as we look forward, there really seems to be no real end in sight to that. Hopefully that will end as we get to springtime. But another factor that gives the funds reason to go ahead and pile on here, because it's simply an unhappy world and several problems going on that no foreseeable end in sight for probably months and months away.
Yeah. So the wheat market would be the most susceptible to those Red Sea shipping issues. Actually, it's been holding up better than corn and soybeans. Why do you think that is?
Well, we finally saw the dollar kind of ease its rally. Wheat's pretty susceptible to the price of the dollar. So I think the wheat market seems comfortable sitting at the $6 level, and that seems to be fair value for what we're seeing for right now.
So one market that has been a contrarian has been this cotton market. So what's driving this breakout that we are seeing? Is it just bidding for acres, or is there more to it?
Well, I think the USDA report showed less cotton stocks, and I think also the demand going forward for cotton. I think there is a point here to be made that they're trying to buy some more acres. I know a lot of producers in the South are still looking at milo or corn, so nice to see a market that can rally, and maybe there's some more left in it. But 85 plus dollar cotton above there turns a profit for some of the cotton producers. So maybe the cotton market continue to grow and maybe pull some acres away from corn.
Yeah, December's quickly approaching that level. We'll see if we get there or not. Cattle market has also been bullish. Do you feel like we're going to be pretty well supported on breaks just because these fundamentals have not changed?
Extremely strong fundamentals. I mean, the cow herd, as small as it is, producers at this point are not really retaining heifers to increase the calf crop. So fundamentally, consumers continue to be willing to pay the price for beef. And eventually, when producers do retain those heifers, that's going to be the point where we're really going to tighten supplies for a year or so as those heifers stay and turn into cows. So pretty positive on the fundamental side. Doesn't mean every day is up in the cattle market, but sure shows that we've got tight supplies, and that's going to continue for several years.
Yeah, no doubt. And if that is the case, if cattle keep moving higher, hogs have had a pretty good correction now off the highs. But do you think hogs are going to catch here? We saw a little higher close today. Will they maybe continue to follow cattle or get help from that market anyways?
I think the best news for the hog market is continuing high cattle prices. You look at restaurants and what consumers are going to look at. I mean, yeah, they're still buying steaks when they go out for special occasions or buying hamburgers, but just the total supply of beef compared to the supply of pork out there supports that hog market. Again, doesn't mean every day's down or every day's up, but I think as long as cattle stay strong, which I anticipate, it's going to help the hog market out as we move into the summer cooking season.
All right, thanks for joining us. Chuck Shelby, Risk Management Commodities, and that is Markets Now.